You believe Islamic finance is completely interest-free, ethical, and a perfect alternative to conventional banking, right? What if I told you that modern Islamic finance has hidden dangers that most Muslims are completely unaware of? Are Islamic banks truly interest-free? Are Sharia-compliant mortgages just a clever marketing trick? And is your halal investment really halal? Today, we're uncovering the 15 shocking facts about modern Islamic finance that every Muslim must know. Stick around till the end, because what you discover today could change the way you manage your wealth forever. Meet Ahmed. Like many of us, he wants to ensure his financial choices are 100% halal. But when he looks closer at his contract, something doesn't feel right. It says profit rate instead of interest rate, and somehow, the final amount seems just as high as a conventional mortgage. Ahmed isn't alone. Millions of Muslims around the world trust Islamic finance, but few truly understand how it works. Fact number 1. Islamic banks often just rebrand interest as profit. Many so-called Islamic financial products mirror conventional banking structures, but use different terminology. Instead of interest, riba, they call it profit rate or service fee. But if the structure and end result are identical to an interest-based loan, is it really Sharia-compliant? Fact number 2. Murabaha, a cleverly disguised loan. Murabaha is one of the most common Islamic financing methods. It involves the bank buying an asset and selling it to the customer at a markup. Sounds fair? Here's the catch. The markup is often calculated using standard interest rates, making it functionally similar to an interest-based loan. Fact number 3. Not all Islamic banks are actually Islamic. Did you know that many Islamic banks are owned by conventional banks? That's right. Some of the biggest Islamic banks are subsidiaries of global financial giants that also run conventional interest-based operations. How much of their revenue is truly interest-free? Fact number 4. Hidden interest in credit cards. Islamic credit cards claim to avoid interest, but look deeper. Many impose late fees that are calculated exactly like interest payments. Others charge monthly service fees that suspiciously resemble conventional interest rates. Fact number 5. Some Islamic investment funds contain haram elements. You invest in an Islamic mutual fund thinking it's halal. But do you know where your money is actually going? Some funds still hold shares in companies dealing in alcohol, gambling, and conventional banks, just in lower percentages. Fact number 6. Tawarruq, a controversial practice. Some Islamic banks use tawarruq, a practice that many scholars deem problematic. It involves buying and selling commodities just to generate cash flow, resembling conventional lending structures in disguise. Fact number 7. The role of Sharia boards. Are they truly independent? Islamic banks have Sharia boards to approve their products. But here's the problem. These scholars are paid by the banks themselves. Does this create a conflict of interest? Fact number 8. Gharar, the risk of uncertainty. Sharia forbids excessive uncertainty, gharar, in contracts. But many Islamic finance products, like takaful, Islamic insurance, and structured Islamic bonds, still contain risky elements that some scholars warn against. Fact number 9. Islamic mortgages versus conventional mortgages. Which is truly cheaper? Islamic mortgages are marketed as better than conventional ones, but research shows that in many cases, they cost the same or even more. The reason? Banks still use standard financial models to calculate risks. Fact number 10 to 15. Quickfire segment with visuals and rapid transitions. Hidden fees in Islamic banking. Some charge excessive service fees. Stock screening issues. Some Islamic stocks don't fully avoid haram industries. The rise of crypto in Islamic finance. Is it halal or haram? Why some scholars criticize Islamic banking. Some say it's just conventional banking with Arabic labels. Islamic banking, success stories. Some institutions genuinely uphold Islamic principles, proving ethical finance is possible. What's the verdict? Is modern Islamic finance truly Islamic, or just a repackaged version of conventional banking? The truth is, it depends. Some institutions genuinely uphold Islamic ethics, while others bend the rules to stay competitive. Here's what you can do. Always read the fine print, consult multiple scholars, and take responsibility for your own financial decisions. Because at the end of the day, your money is your amanah, trust, and Allah will hold us accountable for how we earn and spend it. If this video opened your eyes, don't forget to like, share, and comment your thoughts below. And please pray for my late parents, Almighty Allah grant them Jannah. And if you want to uncover more hidden truths about Islam, subscribe to our channel. Jazakallah khair for watching. And may Allah guide us to pure and ethical financial choices.